My name is Jeffrey Kennedy, and welcome to Elliott Wave Junctures. As a trader, my philosophy is quite simple. I like to find a trending market, and in an uptrend, buy pullbacks, and in a downtrend, I like to sell bounces. Now, there's a technical tool that's very good at identifying just that type of a trade setup, and it's RSI, Relative Strength Index. It was developed by J. Wells Wilder and first mentioned in 1978 in his book, New Concepts in Technical Trading Systems. It was further popularized by Andrew Cardwell, who identified what we call now range rules. Now, range rules are very important because it allows us to identify that type of a trade setup, the pullback in an uptrend and the corrective bounce in a downtrend. Now, what happens in a downtrending market? What you'll see from an Elliott wave perspective, think of a 5-wave decline, waves 1, 2, 3, 4, and 5. Wave 2 and 4 of that 5-wave decline are going to be your counter trend price moves. Now, the type of signature that should develop in RSI in unison with those counter trend price moves is that RSI should push into the 50-60 area and then reverse. Now, in an uptrend, it's a little bit different. In an uptrending market, say for example you see a 5-wave move to the upside, of course you're going to have counter-trend price moves, waves 2 and waves 4. Those pullbacks in price should correspond to retracements in RSI back into the 50-40 handle. So to kind of drive this point home, I want to look at a few price charts. Here's the first one, Alcoa, ticker symbol AA, and what you'll see over here to the left is a downtrending market. This was clearly a counter-trend price move right here, but notice the momentum signature provided by RSI. RSI traveled into that 50-60 area and turned to the downside. Then we have a very nice marked divergence between RSI and price. Now, as the moves began to develop to the upside here, the trend was up. This move here to the downside was clearly a counter-trend move within that larger uptrending market. And again, notice the specific RSI signature. RSI fell to 50 and 40 and then reversed. Let's look at another example. This is another stock. This is Bank of America, ticker symbol BAC. And you can see a number of instances where counter-trend price moves continue to adhere to that signature. Here we have an uptrending market on the left, and that pullback in RSI found support between 50 and 40. Here we have a counter-trend move here because the larger trend is down, and you saw that resistance area between 50 and 60 turn prices lower. And then we fell a bit to the downside here, a little bit below $7 a share in price, but notice where we fell in RSI. We fell to that 50-40 area, which identified this move to the downside as a counter-trend move within a larger uptrending market still. Let's look at a few more examples. This is Halliburton. Now, this is a nice 5-wave advance in this market from the actual June low. We have waves 1, 2, 3, 4, and 5. Notice where wave 4 actually found support. We came right back to that 50-40 area and then reversed quite nicely. Now, from a structural point of view, it's not too, I like the idea we also came back to the price gap. This is how you can actually begin to apply this idea of identifying counter-trend price moves or pullbacks and uptrends or bounces and downtrends by utilizing different indicators. You can look at the price structure, you can look at Fibonacci retracements, you can look at wave equality. Now you can actually begin to incorporate RSI in your work as well. Here was clearly a counter-trend move that formed in April and early May, and as you can see, that counter-trend move did what it was supposed to do with respect to RSI. It found resistance between 50 and 60. Here's another example here. And also, I actually applied a little bit of Elliott wave labeling. Think of this move over here as an A, B, C, and where we found resistance initially in wave A between 50 and 60, found support between 50 and 40 in wave B, and then wave C pushed up to the 50-60 area. This is a very simple way where you can actually utilize RSI to assist you with your Elliott wave labeling. Nice divergence between these two extremes in price and RSI, but notice this counter trend move right here, which is most likely a 4th wave, how that RSI went into that 50-60 area and then reversed. Very simple. In an uptrending market, RSI will find support between 50 and 40 roughly. In a downtrending market, RSI roughly will encounter resistance between 50 and 60. These are excellent areas to be looking for trading opportunities in the direction of the larger trend, which of course is the path of least resistance. Thank you.